Very good morning. You're watching News 9. I'm Karthik Malhotra. This is Morning Brief at 9. On the show this morning, there seems to be a widening trust deficit between India and the United States. Now, with two cabinet ministers, Dr. S. Jaishankar and PIYUSH Goyal, both in US, can there now be a bridge to the diplomatic as well as economic trade rift? We'll discuss that on the show this morning. Also on the show, gold seems to be unstoppable. The rally has topped the 1,15,000 rupee mark in Delhi. Is there anything that is going to stop this rally? We'll discuss that with a guest on the show this morning. And also on the show, with the H-1B application visa fee hike to about 1 lakh US dollars, is it time for IT stocks to be off your list? We'll discuss that with Firoz Aziz on the show this morning. You're watching Morning Brief at 9. This is Morning Brief at 9. First up, let's bring you all the headlines that we're tracking for you this morning. External Affairs Minister Dr. S. Jaishankar meets US counterpart Marco Rubio in New York, discuss bilateral trade and priority areas for sustained engagement. Meanwhile, Commerce Minister PIYUSH Goyal is also in the United States in Washington in a bid to further trade deal with the United States. Details awaited on any relief on 50% tariff imposed by the US on India. US President Donald Trump to address the 80th UN General Assembly session today. Reports indicate he's likely to mention his wins at ending wars, may touch upon India and Pakistan again in his address. France joins the ranks of being among 6 countries to formally recognize Palestine ahead of UN General Assembly, even as Benjamin Netanyahu vows against a two-state hypothesis. The precious yellow metal gold breaches the 1,15,000 per 10 grams mark in Delhi ahead of the Diwali and wedding season. What's driving the rally and will it sustain? We tell you on the show. And the day after massive correction and sharp decline in IT stocks, what's the market outlook for the near term? Anand Rathi says mid-cap IT firms will hurt more as US ups H-1B visa application fee to $1 lakh. AI chipmaker Nvidia to invest $100 billion in OpenAI. News sparks rally on Wall Street as markets close at yet another record high in the US. Meanwhile, Warren Buffett's Berkshire Hathaway exits China's fastest-selling global electric car brand, BYD. And also on the show, does Paracetamol cause autism? Trump and U.S. Health Secretary Robert F. Kennedy Jr. cite data that suggests early pregnancy use of the drug as the cause, even as some experts disagree. Two high-profile cabinet ministers from India are in the US as we speak. External Affairs Minister Dr. S. Jaishankar is in New York addressing bilateral meetings at the margins of UN General Assembly. And Commerce Minister PIYUSH Goyal is at Washington, thrashing out the contours of India's trade negotiations with the US, all in a bid to mitigate the high tariff rates as high as 50% imposed on India. Now, even as India and US display an outreach towards one another, mixed signals continue to widen what many call the trust deficit. Now, I say this as US President Donald Trump is also meeting with Pakistan Prime Minister Shehbaz Sharif at the UNGA sidelines. The India-US diplomatic rift also surfaced last week as US lifted the sanctions waiver on Iran's Chabahar port, a vital conduit for India as it avoids shipping lines in Pakistan waters. The conspicuous silence from US on Pakistan's defense pact with Saudi Arabia adds to India's diplomatic stress. And then the ever unresolved issue of India's demand for a permanent seat at the UN Security Council continues to loom, even as there is some headway on agreement by the 5 permanent members on giving Africa a seat. So what can come out this week from the United States? Let's discuss this. We have Barnik Chitran Mehta, PE investor and managing partner at Chrysalis Equity Ventures, joining us this morning. Barney, good morning. Pleasure having you here on. First up, what do you expect from the UN General Assembly and the meetings that Dr. S. Jaishankar is likely to have as he is addressing bilateral meetings? Because there seem to be a lot of pending issues right now. First up, of course, is the 50% tariff on India's exports. Now, that's something that is being thrashed at two ends by Dr. S. Jaishankar as well as by Minister PIYUSH Goyal. And then, of course, the H-1B visa application fee, which has been hiked to $100,000, adding further economic stress on India's IT sector. And then, of course, we spoke about the Chabahar port sanctions, the waiver which was lifted by the US. And then what also happened last week was the Pakistan-Saudi Arabia Defense Pact. And all of this at a time when India and US are still looking at strengthening the Quad. So what do you make of what is likely to come out this week from India's meetings at the US?
I think the most important thing is that we have the Secretary of State and our Foreign Minister actually engaging in dialogue and reinitiating actually contact and discussions after a quarter of reasonably frosty relationships and a lot of rhetoric mostly coming from the American side. While I don't think there will be any big breakthroughs from the Indian side, it's always good to maintain dialogue. I think one of the most important discussions on the American side is over the past couple of months is the perceived closeness of India with China, particularly the visuals coming out of the Shanghai Cooperation Organization Summit. I think also, if you look at the recent announcements on the H-1B visa, though the initial announcement was quite severe, there has been some walking back on the applicability of that, only muddies the water further. I think separately there is the delegation from the Commerce Ministry led by Minister Goyal, who's heading the trade negotiations. I think at the end of the day, I think the Americans acknowledge that India is a valued partner. I think their confused and muddled strategy is only making it hard for the partnership to deepen. As you mentioned, there is not only a trust deficit, it's a trust deficit which has only grown over the last quarter. And I think the actions of certain sections of the American administration, whether it be inviting their field marshal to the White House or even meeting with the Pakistanis, is not going to help matters. But I think over the long term, I think the Americans are just waiting for a deal. Maybe what may happen within end of this year is maybe a framework agreement gets signed. And I think the Americans actually back out. But again, lots of things to happen. It's all in flux. The Quad summit in October in India is also, it's unlikely that the American president will attend that. While that summit will go forward, I think this relationship is truly in troubled waters. I think, if any, I think at least the dialogue has been reopened between the two foreign envoys from both the parties. But again, no quick resolutions on any of the demands India may have or any of the expectations India may have.
Right. So, Barnik, just put this in perspective, because there obviously is an economic stress with respect to the trade deal with the US, which for all we know may or may not come through. There is absolutely no surety on that front. But then there's also this diplomatic stress on these issues that we spoke about, beginning first with the Chabahar port, followed by Pakistan and Saudi Arabia going ahead with that defense pact. And then, of course, the meeting which Donald Trump is expected to have with Pakistan Prime Minister Shahbaz Sharif today. Now, all of these pointing not just to economic factors, but also a high degree of diplomatic stress on the relationship between India and US, which for decades has actually been pretty good, to put it mildly. Do you think there is a serious threat to these diplomatic ties?
See, in the long term, I don't think there is a severe threat. I think as with any relationship, there are ups and downs, right? I think, but let us acknowledge the fact that the tiff between both these countries is no longer limited to economics, but also the geopolitics. I would be careful to separate the three issues which you just mentioned. The first issue being the issue of tariffs and the strategic tariffs. I think that is an important issue where there is an element of Russia, but the Iran issue in terms of lifting of the waiver is also to do with other geopolitical pressures. I won't put the Pakistan-Saudi deal as something where the Americans or Indians are on different sides of the table. I think on that issue, maybe there is aligned interests between the US and India to ensure that such cooperation deals are not necessarily signed. And to be fair, that deal is more a response to Israel's strike on Qatar than anything else, right?
Right.
And the Pakistanis have had a long history of economic and military cooperation with Saudi. Notably, there was a 1982 military cooperation pact, right? And I don't think that deal, while it being a minor irritant, has a major geopolitical implication either for India or the US. If any, the US is and India are on the same sides of the issue there. But other things like the extraordinary tariffs on Indian exports, the release of waiver on the Chabad port, which I think is quite significant,
Yeah.
which I think needs to be negotiated, right? As well as all other irritants, suggest that what started off as a minor trade tiff, right, has only escalated, right? And maybe this is the strategy of the US administration to get the Indians to agree to a deal. But whatever they're trying, India is not adhering to the playbook of caving in and saying yes to everything the Americans want.
Right.
So this is probably a new kind of negotiating stance they are encountering. But I think India should hold its ground, and there are lot more at stake, right, than minor things like economic agreements. So it's important that we get back to fundamentals and continue to agree that India and the Americans are long-term strategic partners. And it's with this view that the partnership should move forward. Any kind of trust deficit which has come into the relationship has come through unilateral American actions. Nothing which the Indians have done which has exaggerated it. In fact, the India-Russia oil deal was something 2 years back which had implicit approval by the Americans, because
Right.
the Americans are fine with Indians buying Russian oil capped at $60, because that would keep global oil prices low.
Right.
And keep oil prices low for their domestic concerns. So nothing over the last 3-4 years has happened where India has fallen out of lockstep with their agreement with the American partners. It's only a set of unilateral actions taken by them which has introduced this trust deficit. But over the long term, this should get settled. I think it's good that both parties are talking, and there may be some good news in 3-4 months, particularly on the trade front.
All right. And specifically on the trade front, I think our red lines are fairly clearly drawn. So even as Minister PIYUSH Goyal is in Washington trying to thrash out the contours of that trade deal, are there any areas that you see that India could or should perhaps go a little slow on, go a little easy on when it comes to these red lines? Because I think India has made its position fairly clear that we will continue to buy Russian oil because that is in our national economic interest. I think India is pretty clear that protecting its farmers, protecting its MSMEs is of vital importance. So overall, do you think there is some scope for negotiation where India could give in a little bit to gain a little more from the US? Or do you think we are pretty clear that we cannot move from these red lines that we have drawn?
We see some of these red lines are very hard, and it's highly unlikely that this administration will budge on those red lines. Notably, access to India's agriculture sector, dairy sector, introduction of GM crops is something the Indians are hardly likely to move on. There may be some minor concessions given, like allowance of entry of American cheese, which is probably addressing only 1% of the Indian market, right?
Right.
Maybe some concessions to really small things like the ability for India to maybe import some corn and all of that. So I do expect that in the spirit of cooperation and the spirit of giving the presidency and the administration a win, there may be minor concessions. But the hard red lines on not opening up India's dairy sector, or opening up India's agriculture sector, or opening up India to GMO crops, these are reasonably multi-administration, multi-party consensus which has evolved in India over the last 75 years. I find it highly unlikely that there will be any concessions offered on these hard red lines.
Yeah.
Whatever may be offered will only be token to give the Americans the sense of a win, right?
Right.
Like other countries have done, but I don't see any of those red lines fundamentally moving.
All right. No fundamental shift in those red lines is the view coming in from Barnik Chitran Metra. Barnik, thank you so much. As always, pleasure having you here with us on News 9. And moving on now, the prices of gold have shown volatility in the last few days, but once again, it has decreased slightly. Gold prices rallied by over 1.5% in yesterday's session, surpassing the 1,11,000 rupee mark on the MCX. Following 8 consolidation sessions, the precious metal has regained bullish momentum, decisively breaching the immediate resistance level of 1,10,300. Now, in Delhi, it went past 1,15,000 rupees per 10 grams. In fact, touched 1,16,200 just yesterday before settling slightly lower. Now, what seems to be driving this rally in gold, which seems pretty unprecedented, and experts who had believed that perhaps gold is going to settle down at the level of about 1,10,000 rupees or so per 10 grams, now seem to have been drawn back in their defense for the precious metal. Now, there are multiple factors, of course, lead among them being gold continues to be a safe haven investment, and of course, add to that the pressure on the US Fed to cut rates, which has finally happened, but no real news yet on the US inflation. All of these could be issues that could again fuel another rally in gold for India. The timing could not have been worse as India heads into festive season, and at the same time there is also the wedding season which is going to kickstart in the month of November. A lot of factors driving gold's demand, most notably large central banks around the world also preferring to pick up gold rather than the US dollar. Kunal Shah, head of commodities research at Nirmal Bang, is here to take us through A, these factors which are driving the rally, and B, how long are we going to see this rally continue? Kunal.
Yeah, so it's been a big question that now everyone is seeing a massive bull run in gold on account of various macro reasons. And I think the major catalyst right now in the gold bull run market, more than the central bank, it is the ETF demand. If you look at what is happening on the ETF creation in gold, it is at 3 years high. So Western investors, more than that, the Asian investors have been flocking onto gold ETFs, saying that due to the ongoing trade wars, due to ongoing geopolitical concerns, due to ongoing burdening balance sheet of the Western central banks, all of them makes them believe that it is important to have allocation towards gold. And I think considering the kind of problems we have in the global economy, the allocation towards gold by the investors is relatively very low. So in a time where there is a possibility of a bond market may destabilize going forward in the Western economies, like every time we see the sign of inflation, the 10-year bond yields, the 30-year bond yields start shooting up in US, in UK, in Germany, in France, in Japan. So this kind of scenario makes investor believe that the gold is the only safe haven, and all of them are attracted towards it and are allocating their funds into gold. So I see this trend continue going forward, and that is what basically is driving gold prices. So all our targets are achieved basically, but I think the prices may remain buoyant in a near term because of the problems the world is facing, and there is no easy solution available in the market.
So as Indians head into festive season where gold buying is not just auspicious but also fairly mandatory when it comes to Diwali buying and as well as the wedding season, Kunal, what should they do at this point? Is it the right time to open those family lockers and just trade some of the existing gold rather than entering the market at these levels?
I think yes. I mean, if you want to buy gold, I would not recommend to buy at these rates. These are very
But Kunal,
at
many
these
would
rates.
argue that this has been the view coming in for months now, and perhaps had they not taken your advice and gone ahead and bought some gold, they might have been in a better position today, wouldn't they?
Yeah, so it's like uncharted territory. See, the thing is, the way things are unfolding globally, it is beyond anyone's prediction. I mean, you cannot predict that what is going to be the scenario 2 months or 3 months down the line. So every day we see a new crisis, a new geopolitical front is opening up, the new problem. So now US is cutting the interest rate and Japan is on the verge of hiking the interest rate. So I mean, there is so much uncertainty in the world. People have no choice but to remain long in gold. So I think there is too much optimism in near term, and I would stick out my neck and say that I would not initiate a fresh buy at these levels.
And for those who are holding excess gold, who had perhaps invested in the immediate post-COVID recovery phase when markets had begun to sort of, inch up and gold prices were a little more stable, do you think it's time for them to cash out? Is this a good time to exit their holdings and make a killing from what they invested, let's say, 4 years, 5 years ago?
Yeah, I think yes. I'm not in advocating that book full profit, but at least part profit you can book because you are sitting on hefty gains. and it's good to book profit at these levels. So if you are having for example, whatever quantity you bought, 50% of that can be booked as a profit.
All right, so perhaps book 50% of your gold holdings as profit is the word coming in from Nirmal Bang's Head of Commodity Research, Kunal Shah. Kunal, always a pleasure having you here with us on Newsline. Thank you so much for your time. And with that, we will slip into a very short break. But coming up on the other side, market seems to be a little bit in the green this morning. In fact, better than yesterday. The rally being driven by auto stocks as a lot of customers queued up to book their cars on the first day of Navratri. IT stocks are also faring a little bit better this morning, perhaps on account of some value buying by investors. We'll bring you all the news that you need to know on stock markets. On the other side, Feroz Aziz will be here to take us through his views.
Dreaming about me.
Love is to get lost in the look. Unlimit Love. B6 Pack 2 starts at 21.9 lakh. Mahindra Electric Origin SUVs.
सर वाटरप्रूफिंग के लिए बेस्ट है।
वेंकी जी एक छोटा सा गिफ्ट बिरला ओपस अश्योरेंस देने के लिए।
ऐसा क्या है इसमें?
1 साल में वाटरप्रूफिंग को कुछ भी हुआ तो वापस करके देंगे।
वापस करके देंगे?
वो भी फ्री। पेंटिंग में पहली बार बिरला ओपस अश्योरेंस। रजिस्टर करो birlaopus.com पर।
अलौकिक, अद्भुत, अनुपम और भी ज्यादा भव्य होगा दुर्गोत्सव का जश्न। बेमिसाल 2 सीजन्स के बाद TV9 नेटवर्क एक बार फिर लेकर आ रहा है फेस्टिवल ऑफ इंडिया सीजन 3। फैशन और लाइफस्टाइल का ग्लोबल एग्जीबिशन फैमिली और फ्रेंड्स के साथ होगा एक्सोटिक फन। TV9 फेस्टिवल ऑफ इंडिया सीजन 3 का हिस्सा बने। 28 सितंबर से 2 अक्टूबर मेजर ध्यानचंद स्टेडियम, इंडिया गेट, नई दिल्ली।
पापा इससे पहले जो चलाई थी वही ले ले।
चलती बढ़िया है। कुछ कह रहे थे?
नहीं, इनकी सर्विस में डाउट था ना।
सर ओवर 300 टच पॉइंट्स, 170 सेंसिटीज।
पर इन्हें सिर्फ 25 ही साल हुए हैं।
तुमसे तो ज्यादा ही है।
Skoda Fan Fest is live. Walk in today for a test drive and avail exciting benefits.
Skoda. She'll leave when she has a kid. Does she even want this?
Women don't scale companies.
She's okay for support roles.
When do we stop asking if she's ready?
Women-led development is the panacea for the world.
Back, you're watching Morning Brief at 9. Let's bring you all the action from Dalal Street as markets opened just a few minutes ago in a better mood than what we saw yesterday. After declining almost half a percentage point or so, the benchmark indices are a little bit in the green this morning, although trade seems to be more or less in the flat territory. All the action seems to be coming from auto stocks, which are rallying like never before. We will, of course, pull up the Nifty 50 heat map for you. But before that, let's look at Sensex right now as well as Nifty, both in the green. Look at the Nifty 50 heat map now and look at the auto sector, because the auto sector is where all the action is coming from. Stocks of Maruti Suzuki as well as Mahindra and Mahindra are up. Let's pull up the Nifty 50 heat map and look at the sectoral action, because we seem to be seeing the first day of Navratri really being a blessing for auto stocks as customers queued up waiting to book their cars at those reduced prices, and all of that seems to be driving up auto stocks this morning. Maruti is up about 3%, Mahindra & Mahindra is up about 2% or so, Tata Motors is up about 1.5%. But that is not the only thing which seems to be driving the markets this morning. There is a little bit of value buying also visible in IT stocks that took a major beating yesterday. So stocks of Infosys are up almost 0.4 of a percentage point. Similar story coming from Wipro as well. But the FMCG stocks seem to be in the negative despite the GST savings which now accrue to consumers who are going to go ahead and potentially shop more. Let's see what the market outlook really is from here on. We've got Feroz Aziz, the joint CEO of Anand Rathi, joining us this morning. Good morning, Feroz. Welcome back to Newsline. Pleasure having you here with us again. And of course, we were reading the market outlook report that Anand Rathi has published. And I think one of the main concern right now seems to be around the H-1B visa overhaul. And your report says that it's likely to hurt the mid-cap IT firms more than the large-cap ones. And the effects are likely to be seen from FY27. Why do you think it's going to be the mid-caps which are going to hurt more?
Karthik, like you rightly said, the H-1B visa is going to hit the mid-cap IT more, because what's happening in the mid-cap IT is they were already reeling under pressure of a large headwind in the IT sector. And the mid-cap space, if you look at the kind of dependency on outsourcing services, is a tad more than the large-cap space. The third is because the valuations in the mid-cap IT have got a little stretch from a valuation standpoint. All these three as factors are a headwind to the IT space, especially the mid-cap. When it comes to sectoral allocations, we have been negative IT over the last 7-8 months. And I think this is reasonably extra blow, or can't call it the last nail in the coffin, but that's too pessimistic. But I think at least interim, you will see more pain in the space.
Okay, more pain in the space. So what should investors do right now, Feroz? What do you suggest those who are holding on to some of these mid-cap as well as some of the large-cap IT stocks? What should those investors do with their holdings?
See, I think if there is something which is not a short-term kind of a problem and a long-term kind of a structural difference in the P&Ls of companies, I would definitely say there's no reward for bravery in the capital markets. Bravery is not something which you should exhibit.
Okay.
I personally would like a client or an investor to move to sectors which have been bullish on A, B, C, D, E. Is an abbreviation for people to remember: automobile, banking, consumption, drugs, and drugs as in pharma, and E as in renewable energy. Okay. These are the 5 sectors which can have a potential to beat Nifty over 3-4% annually for the next 2-3 years. And this is where, if your portfolio is a little more skewed, your excess returns over Nifty become higher and higher probability.
Oh, fantastic. So A, B, C, D, E, an easy acronym for investors to remember. Thanks for that, Feroz. I also want to touch upon another point that you highlighted in the market outlook, and this happens to be about the market performance. And the report suggests that drawdowns are in line with historical average. But I think investors would be wondering that it's almost going to be just in a few days, 1 year to markets touching the peak record high, and the entire last year has been flat, albeit a little negative for some investors. But you're saying that the drawdowns are in line with historical average. What else does history tell us? How soon can we see some recovery?
See, market is people think that market is not predictable. Market is very predictable in the long run. You just see the last 1 year, like you rightly said, Karthik, Nifty has done nothing, 26,200. Down to 25,200, almost a year, another 2 days. I think if today is 23rd, 24th of September, tomorrow, I think you will finish exactly 1 year of correction from the peak Nifty has ever achieved. But if you just encompass another 1 year before that, October 23, I remember very clearly, the expiry of October 23 was 18,700. Okay. So if you look at 23 months from 18,700, it's come to 25,200. If to just see whether you will see the glass half full or half empty, or full, because right, there's half the glass is air and half the glass is water. You can't ever have half the glass empty.
Right.
So point is, if you look at 23 months, Nifty has delivered 6,000 points on a base of 18,000, which is like a 13-14% per annum return, even after a 1 year time correction.
Right.
Market always gives you return in pockets and then relaxes in a park, like a central park, and says, okay, wait, let the rest of them jump in and then I'll move again. So as long as you understand this small little behavioral pattern of the market, you'll be able to take the benefit. Unlike real estate, people don't make money in equity because they're not acknowledging this static behavior of any asset class. Real estate also, the house I'm sitting in, if this building was built 15 years back, it has moved up 12 times from in the last 15 years, but there were 5-year pockets where it gave no return.
Right.
But I hung on to this property. So a little more philosophical, but I personally think market has delivered 14% for 2-year pockets. 1 year correction itself implies time to get in.
All right, time to get in is the view coming in. I also want to touch upon the economic tailwinds which you mentioned in the report, and of course no denying the GDP growth that we saw for Q1, and of course that has far exceeded the expectations, also revising the annual growth forecast to about 6.5%, and inflation also continues to be below the RBI's target. Overall, the fiscal deficit also should be improving now with the GST cut that we've seen, likely to prop up some demand. So economic tailwinds, obviously the fundamentals of India's economy is strong, but the things which are not in our control is what is happening outside of India and globally. Those are things which could continue to act as tailwinds. So how do, I beg your pardon, as headwinds. So how do domestic tailwinds and global headwinds sort of clash for investors to get a view on which direction the markets are going to take?
See, I think, Karthik, like you rightly said, domestic economic variables, if I have to rate them, they are 9 on 10. And that's the macroeconomic variable you need for a good, conducive, fertile ground for market to perform. Second, global headwinds, I would say they are 2 on 10 in terms of supporting us. But the good part is the headwind from the global side has been bad for the last 7-8 months. Clearly, after Trump broke out the tariff war. So I think a lot of monies have already gone out from the FII fraternity. See, if somebody sitting in the US is hearing Trump that India is going to have a 50% tariff, he will surely sell or she will surely sell. But they've already sold. That's why Trump also was not successful in creating a panic in the equity market. But bechega kaun? A domestic guy, if I speak to a fund manager, he says, bechunga to karunga kya? Right, I am already getting 28,000 crores of SIP money. If I sell a stock, what do I do with it? So point is, you need a seller for every panic. So panic created no seller, no market follow. So markets have not gone down to 21,700 from March, where it was lows, which it created. So coming back, if you look at the global headwind, I'm not too worried about the global headwind because that has already languished for 8 months and has created a lot of outflow.
Right.
But Indian money is going to continue next 8 years. Statistically, if you extrapolate, 52 lakhs is what domestic institutions will put into equity markets. Like the last 4 years has been 15 lakhs.
Right.
Next 8 years is going to be 52 lakhs. So if that's going to happen, market is going to remain buoyant at least for a few years, and pessimism of crashes would be difficult to fructify.
All right. So again, what you are potentially alluding to is that the DIIs are absorbing whatever the FIIs are doing in terms of negative action. But there's also an interesting point which your report talks about, which is the boost to long duration bond funds. So for those investors who are perhaps not getting the kind of returns that they are looking at from equity markets, do you think this is the time to perhaps dabble a little bit into bond markets as well?
Karthik, see, I think if you are a big treasury, that part of the report is relevant to you if you're writing. Because what happens is tax inefficiency will eat away the capital gain even if there is any 10-year G-Sec softening. So if you've already seen what has happened is the spread is very low. The 1-year, 10-year G-Sec and the repo rates are just about 1% away. Historically, the short end of the yield curve has been lower than the long end of the yield curve. But I think to answer your question, yes, can you make some capital appreciation in bonds? If not on the 10-year G-Secs because of the spread compression, yes. but tax disadvantage takes away most of this capital appreciation. So I would say for a retail investor or an individual investor, playing the bond market is is not worth the buck. I would rather have a hold to maturity play of a 10-year and in a fund which actually combines arbitrage and debt fund to escape the new section of income tax, which is section 50AA, which brings in short-term capital gain. So if you combine this hybrid instrument of arbitrage and debt, you get a taxation which is very attractive after 2 years, 12.5%. So I think if you're trading in GSEC and bond market, definitely you have some capital appreciation to make. But if you're a person who's wanting to hold it long term, then I think tax inefficiency will eat away all the capital gain which the bond market has to offer, if at all.
All right. And finally, of course, earnings for FY26. Your report says that earnings are expected to be in the range of about 6% to 16%, a wide enough range, understandably so. But it also seems that perhaps you're saying that the Nifty trades are close to the fair value, but there could be some froth in the small and mid-cap space. Now, this froth emerging from which sectors particularly, and hence, just to rephrase that question, which are the sectors that one should potentially stay away from? You've mentioned the A, B, C, D, E as priority sectors, but with this froth, which are the sectors that one should avoid in this particular financial year?
I would say cyclical metal stocks, defense stocks still have a lot of frothy valuations because there have been very short-term trades taken. Once the momentum goes away, people exit. Any stock in the Nifty Momentum Index you have to be wary about. You will have to exit at the right time before the momentum play is over. That's one. Second, when it comes to earning, the way the street looks at earnings sometimes has an incorrect behavior. If you asked anybody, NSE Small Cap 250's earnings growth last financial year, that is FY25, most people will tell you it was negative earnings growth or degrowth of earnings of -9%, but that's not the case. Actually, there were 63 changes in that 250 index. If you eliminate those 63 changes and look at the same 250 stocks which currently form the part of NSE Small Cap 250, the earnings grew by 18%. I was speaking to somebody on a panel and he says small cap key earnings are -9%, but it was not -9, it's +18. There were 63 companies which changed in the index. So you will have to replace back those and then check the earnings of an index, which is not a constant constituent. So I personally think that's why the range 6 to 16 starts from Nifty to the NSE Small Cap 250.
All right.
3 indices are the most important in India. Nifty 100, Nifty 150 and Nifty Small Cap 250 because that's what the institutions are mandated to follow.
Right. All right, Feroz. And as we speak, of course, markets have slipped into the red. It seems like a bit of a choppy day and this choppiness continues. In fact, even on the tech stocks, the companies that were registering slight gains as value buying have now slipped into the red. Feroz, final question to you. Volatility, is that the nature of the game? Should you not get impacted by volatility? Because we are likely to see these ups and downs with the barrage of news, both domestic as well as globally. Is the best strategy still to just stay invested, look at the long term, don't worry about the minor volatility that you see every day?
I think life is all about expectation and reality. As a derivative trader, I am cribbing that there is very little volatility.
Okay.
If you are expecting there is zero volatility, markets will open, stocks will only remain 0.1% up or down. Volatility actually in India is very lower, significantly lower on an Excel sheet. Volatility is measured as how much movement per day. If you look at S&P 500's volatility, it is 19%.
Okay.
India's volatility is 16% over the last 1 year, measured in the form of standard deviation of Nifty prices for last 1 year.
Right.
In math, there is no grey shade. S&P 500 has thrown up more volatility than Nifty 50 for the last 1 year, and a derivative trader or an observer will find this volatility lower. So every day a 0.9% movement in Nifty is an expected volatility.
Okay.
Because there are a lot of derivative regulations which have started coming from July and August, the volatility has dropped. If you just observe, for the last 20 days, the market has been in the range of 24,400 to 25,200. Every day Nifty is moving 30, 40, 50 points, 70 points. These are not volatility numbers. Volatility is a gap up of 1.5%. When did we last see a gap up of 2% or a gap down of 2%?
Right.
Recollect. Is that not the nature of the market? Volatility has dropped because derivative volumes have dropped. And that's good for an investor and bad for a trader.
Got it. So we will leave the beta for the derivatives traders like you and hope that the investors out there do find their alpha. But thank you so much, Feroz Aziz. Pleasure having you as always here on News9. And before we slip into another break, let's look at the global stories that we're tracking for you this morning. US President Donald Trump tells pregnant women to avoid painkiller Tylenol, also called paracetamol, more commonly, linking it to autism in children, despite no scientific evidence. Also calls for sweeping changes to childhood vaccines. Donald Trump announces Uzbekistan Airways to buy up to 22 Boeing 787 Dreamliners in an $8 billion deal with the US plane maker. France formally recognizes Palestine at the UN General Assembly in New York, joining Britain, Canada and other Western allies in a historic move. White House says a US version of TikTok will feature a homegrown model of its price algorithm, key to keeping both privacy and platform alive in America. Wall Street closes at new highs for a third straight session. Tech stocks lead the rally, with Nvidia soaring after massive OpenAI investment of $100 billion. Russian President Vladimir Putin says he's open to extending New START nuclear arms treaty beyond expiry, but only if Washington sticks to its limits too. EU Foreign Policy Chief Kaja Kallas says nations have the right to defend themselves against Russian airspace violations as NATO members accuse Moscow of repeated incursions. White House plans to embed Meta's Llama AI into federal agencies. Officials say it marks a major step in commercial AI adoption by the government. And Warren Buffett's Berkshire Hathaway exits Chinese EV maker BYD, closing out a 17-year bet that multiplied more than 20-fold. These stories on the other side of the break. You're watching Morning Brief at 9.
Alakazam fish disappear. Mom, Dad.
Smooth, silent, seamless. Sliding systems from headache.
You can take a left, you can take a right. Adam is salsa or a little time. If you really feel it, say it on price. It's the vibe, it's the vibe, it's the vibe.
Welcome back. You're watching News9. Let's bring you all the action from the UN General Assembly. US President Donald Trump, hours before heading to address the UN General Assembly, sparked controversy at the White House on Monday with some medical advice. Now, Trump urged pregnant women to tough it out and avoid popular pain medication Tylenol, popularly known as paracetamol in most countries, claiming it's linked to autism that scientists say does not exist. He also called for sweeping changes to the vaccines given to babies.
I'm going to say it like it is. Don't take Tylenol. Don't take it. If you just can't, I mean, it's fight like hell not to take it. There may be a point where you have to, and that you have to work out with yourself. So don't take Tylenol.
We have also identified an exciting therapy that may benefit large numbers of children who suffer from autism. Peer-reviewed literature has documented that up to 60% of folate-deficient children with ASD can have improved verbal communications if given leucovorin.
Now, Trump's remarks fly in the face of decades of medical research and consensus. Health experts and medical researchers have long said that Tylenol's main ingredient is among the safest options during pregnancy.
I would say we have strong evidence that acetaminophen is not causing autism. It's certainly not the cause of autism. And so to make that sort of statement that nobody should take Tylenol takes away the individualized nature of how we practice medicine and how these medicines are prescribed for families, for the people that they're prescribed for, both during pregnancy and for children.
And moving on to UNGA now, France recognized a Palestinian state at the United Nations General Assembly in New York on Monday, joining ranks with Britain, Canada and other Western allies in this historic move. Dozens of other world leaders also embraced the idea of an independent Palestinian state nearly 2 years into the Gaza war.
Le temps est venu.
Time has come. This is why, loyal to my country's historic commitment to the Middle East, for peace among Israeli people and Palestinian people, I declare that France recognizes today the state of Palestine.
Et le peuple palestinien.
We Europeans will set up a dedicated instrument for Gaza's reconstruction in coordination with other donors' efforts. Gaza must be rebuilt, the Palestinian economy must be relaunched, and I invite all of you to join in the effort to make this happen.
Well, the White House on Monday said a US version of TikTok would feature a homegrown model of the app's prized algorithm, potentially clearing one of the main obstacles to keeping the Chinese-owned platform online in the United States. Often described as TikTok's secret sauce, the fate of the video-sharing app's algorithm was one of the main question marks in persuading China to allow the platform's transfer to US ownership.
Under the terms of this deal, TikTok will be owned by a majority of American investors and controlled by a board of directors with extensive national security and cybersecurity credentials. In partnership with the U.S. government, Oracle will serve as TikTok's trusted security provider, and they will independently monitor the safety and data security of all U.S. user data on TikTok's platform. Americans' data will be stored securely in the United States without access from China.
And on to Wall Street now, which continues its record run for the third straight session as all the three major indices closed at fresh highs on Monday, led by tech stocks. Nvidia shares jumped after announcing a massive investment in OpenAI. Here's a U.S. market wrap with all the details.
All three major U.S. stock indexes registered record closing highs for a third straight session on Monday, with the Dow gaining more than 0.1%, the S&P 500 adding over 0.4%, and the Nasdaq climbing 0.7%. After last week's quarter percentage point rate cut by the Federal Reserve, some central bank officials on Monday expressed doubt over the need for further cuts. Potential inflationary pressures from President Trump's tariffs are just one reason investors should remain cautious in this bull market, said Dean Smith, Chief Strategist and Portfolio Manager at Folio Beyond.
The fact that the entire environment can change really quickly on the basis of, a couple of tweets coming from the president or someone in his administration means that I think investors should be playing things pretty close to the vest right now. Stay cautious. Don't take a lot of interest rate risk. Again, if inflation continues to rise, as I think it may, interest rates on the long-term side of things are going to continue to rise. Anytime you can diversify, reduce your risk posture, I think that's a good position to be in over the next quarter or two, at least.
Shares of Tylenol maker Kenvue were down about 7.5% at the close, ahead of remarks by Trump that Tylenol contributes to the development of autism during pregnancy, a claim many doctors dispute. But the stock gained roughly 6% in extended trading during Trump's speech. Other movers included NVIDIA, which rose roughly 4% after the chip maker said it will invest up to $100 billion in OpenAI. And shares of Apple jumped more than 4% after Wedbush raised the stock's target price on strong demand signs for the iPhone 17.
Moving on now, Russian President Vladimir Putin signaled willingness on Monday to stick to nuclear arms limits under the new start of the Strategic Arms Reduction Treaty beyond its expiry next year, but only if United States does the same. The agreement basically limits how many nuclear weapons each country can have. More details in this next report.
Russian President Vladimir Putin said on Monday that he was ready to extend the New START arms control treaty with the U.S. by 1 year, an agreement that limits how many nuclear weapons each side can have.
After February 5th, 2026, Russia is prepared to continue adhering to the central quantitative limits of the Strategic Arms Reduction Treaty for 1 year. Going forward, based on an analysis of the situation, we will make a decision if we continue adhering to these voluntary self-limitations. We believe this measure will only be viable if the United States acts in a similar manner.
White House Press Secretary Caroline Leavitt said on Monday that President Donald Trump would respond publicly to Putin's proposal at a later time.
The president is aware of this offer extended by President Putin, and I'll let him comment on it later. I think it sounds pretty good, but he wants to make some comments on that himself, and I will let him do that.
The agreement is the last U.S.-Russia Strategic Nuclear Arms Control Accord. It allowed for only one 5-year extension, which Putin and former President Joe Biden agreed to implement in 2021. The offer comes as Ukraine tries to convince Trump to impose harsher sanctions on Russia, something that Putin made public at a meeting of the Security Council. Russia and the United States have by far the biggest nuclear arsenals in the world, and many experts fear that ending the limits could fuel an arms race, as both sides boost strategic weapons deployments.
Staying with stories around Russia, EU Foreign Policy Chief Kaja Kallas said on Monday that every country has the right to defend itself if Russian planes violate their airspace. Now, this comes after NATO members accused Moscow of repeated incursions into the alliance's territory in recent weeks. Remember, last week, Estonia reported 3 Russian MiG-31 jets had crossed into its airspace for 12 minutes before being forced to withdraw. The incident followed the entry of 20 Russian drones into Polish skies earlier this month, which NATO fighters shot down, and a separate Russian drone incursion into Romania. Listen to what EU Foreign Policy Chief had to say.
Well, it is clear that Russia is testing us. How far it can go. It's also trying to sow fear within our societies that, if we are supporting Ukraine, then this war comes to other territories and it's expanding. And that's why we have to be very firm on this. Now, as the Polish Prime Minister today said, if the planes are violating airspace, every country has the right to defend itself and act accordingly. And this is, I think, important to understand that everybody has an obligation in front of their own citizens that these kind of incursions are not happening.
And finally, Warren Buffett's Berkshire Hathaway has officially exited its stake in Chinese electric car maker BYD, closing out a 17-year investment that multiplied more than 20-fold. The next report explains why Buffett's company is pulling the plug now on BYD.
Warren Buffett's Berkshire Hathaway has fully exited BYD. It brings an end to a 17-year investment that grew more than 20-fold during that period. A filing by Berkshire's energy subsidiary recorded the value of its BYD investment as zero as of end of March. That was down from $415 million at the end of last year. Buffett's company began investing in the Chinese electric vehicle maker in 2008. It paid $230 million at the time for the equivalent of a 10% stake. Berkshire began selling those shares 3 years ago after BYD's share price had risen more than 20-fold. The investment giant didn't immediately respond to a request for comment on Monday. A BYD executive used Weibo to thank Berkshire for its investment and help. They described the stake sale as a normal stock investment trade. BYD did not immediately respond to a request for further comment.
That's all we have for you on this edition of the Morning Brief at 9. Thank you so much for watching, but news continues right here on News 9, so stay tuned.
Love is nothing without the thrill. Unlimited love. The B6 Pack 2 starts at 21.9 lakh.
Mumbai, brace yourself. The GOAT or Batra satire is back. Cyrus Roja. From politics to pop culture, from your WhatsApp forwards to breaking news, nothing and no one is safe.
Relax, guys, relax. I only roast the truth, and the truth is always hilarious. Too much pressure.
Get ready for news caustic, bold, sharp, unfiltered, 100% Cyrus.